You're looking at footage of a historic event that took place just this week. Despite all the doubts and mixed predictions from analysts, Trump has officially signed an order to create a strategic Bitcoin reserve in the US. Naturally, prominent figures in the crypto space, like Michael Saylor and the CEO of Coinbase, called it a game-changing moment that will go down in history. So, what did crypto investors do next? They rushed to check their portfolios. But instead of green numbers and a massive pump, we saw another price drop, liquidations, and an outflow of $400 million from Bitcoin ETFs. This turned into a classic case of selling the news. Now, the big question: what happens next? The Bitcoin reserve has been announced, so are there any more bullish catalysts left for the market soon? It's fair because, historically, crypto thrives on speculation and hype. But let's not forget, we've seen a similar situation before, with Bitcoin ETFs. Back in mid-2023, when BlackRock first announced its ETF application, Bitcoin rallied all the way into early 2024. But as soon as the approval came on January 10th, the price started dropping, and the correction lasted over a month. Despite the short-term disappointment, the Bitcoin reserve will still have a strong long-term impact. In this video, I want to break down everything that happened this past week, analyze Trump's executive order, discuss its implications for crypto, and look at Bitcoin's current market situation to assess its short-term prospects. Let's start with why the White House summit left crypto investors so disappointed. When Trump teased this summit last week, it created major hype, especially when he later announced plans for a U.S. crypto reserve including altcoins. Many expected this event to bring regulatory clarity or major policy changes. That didn't happen. The summit began with Trump making a short speech briefly mentioning the government's plans to create a Bitcoin reserve. There was talk about helping FIFA launch a token, and the Digital Assets Act timeline was pushed back. Trump's words were classic: "Welcome to the first ever Digital Assets Summit. I know many of you have been fighting for this for years. We are making historic moves to make America the capital of Bitcoin." The problem is, there was no real substance behind those words. The crypto industry representatives spent most of their time praising Trump and thanking him for saving the market from regulatory crackdowns. Coinbase's CEO said Trump had helped curb the power of the SEC and other regulators. What angered the community was the overall tone. Instead of addressing actual problems, industry leaders were busy flattering Trump. This sparked backlash, with one well-known crypto trader posting, "We're cypherpunks who used to fight against the system, and now we're sucking up to politicians just to pump prices." The summit lasted only 20 minutes, mostly filled with rehearsed speeches, no concrete promises, no detailed plans. Many investors felt that instead of remaining independent, the crypto industry was now leaning too heavily on politicians. Crypto critic Peter Schiff called the summit a national embarrassment. But is it really all that bad? There are some positives. First, Trump stated that the government will never sell its Bitcoin holdings again. Last year, US government Bitcoin sales worth millions triggered major market dumps. Second, Trump instructed officials to explore new ways to acquire Bitcoin for the reserve. Third, his administration is planning to revise the previous tax guidelines on crypto. David Sachs, the White House official responsible for crypto policy, explained that the Bitcoin reserve would consist of assets already confiscated from criminals. The U.S. holds 198,000 Bitcoins, worth about $17 billion. The reserve will also include other seized cryptocurrencies. However, Sachs clarified that the government isn't planning to buy additional assets, only hold what it has acquired through confiscations. There's an interesting nuance here. When Sachs talks about not buying more assets, he's referring specifically to altcoins. Otherwise, why would Trump instruct officials to study ways to acquire more Bitcoin? The market reacted negatively because many expected the US to buy billions of dollars worth of Bitcoin right away. But remember the Bitcoin ETFs. After approval, capital didn't flood into Bitcoin overnight. It took over a month before we saw real price impact. This is similar. The Bitcoin reserve isn't a short-term pump event, it's a long-term catalyst. The US has officially embraced Bitcoin, and they may eventually expand their holdings. So, what's the bottom line? Having a Bitcoin reserve is obviously better than not having one. Trump is unpredictable, and you should take his promises with caution, but making hasty conclusions would be a mistake. Everyone wants Bitcoin to skyrocket past $120,000 overnight, but patience is key. History shows that those who wait often see huge payoffs. This summit was just the beginning of a larger Bitcoin and crypto adoption process. As U.S. Treasury Secretary Scott Bessent put it, the first step is to stop selling. Then, we move forward with our plan. Now let's examine Bitcoin's situation. Recent data shows that whales are accumulating Bitcoin again after over a month of selling, something that hasn't happened in over a year. This is a good sign as whale buying often signals an upcoming rally. Meanwhile, Binance is seeing record-high stablecoin reserves, over $31 billion. This suggests investors are loading up on stablecoins, possibly preparing to buy crypto at lower prices, and that Binance is increasing reserves to handle growing demand. Rising stablecoin reserves have often coincided with Bitcoin price surges. But there's another side. CryptoQuant analysts note that the market is stagnating, with predictable price entry points for new investors. This suggests Bitcoin is stuck in sideways movement. Unless we see strong catalysts, only positive economic reports could serve as one. We might experience prolonged consolidation. The realized price moving averages are tightening like they did in May last year, which led to low volatility and market consolidation. So, whales are buying again and stablecoin reserves are increasing, creating a favorable environment. But the market isn't showing clear signs of readiness for a major move. What should we do during this consolidation? We need to pay close attention to the US economy. While everyone focused on the crypto summit on Friday, Jerome Powell spoke at a forum in New York. He said the Federal Reserve isn't rushing to cut interest rates, preferring to wait and see how Trump's proposed measures play out. Powell emphasized not rushing changes in monetary policy given the high market uncertainty. This is key because markets are jittery over Trump's policies. Investors are unsure about long-term effects, adding to volatility. Powell and the Fed are urging patience, better to wait than take unnecessary risks. We'll see exactly how Trump's policies are influencing the economy in upcoming reports on the Consumer Price Index, labor market, and unemployment, which start next week. Sometimes, one strong economic report or positive news is all it takes to spark a rally. We'll keep an eye on developments and stay on top of the latest market updates. Well, friends, that's all for today. Don't forget to subscribe to our channel to stay updated on new videos and share your opinion in the comments. Good luck, and until next time.